Hey, greetings everybody. This is Jeff Scott and welcome to this week's top-down review. It's really not 7/12 yet, but who knows what time this will get posted, but it's certainly the weekend of 7/12. Thank you so much for joining me. Before I get started, if you're watching this on YouTube, if you want to be notified of future videos that I might do, which are usually once a week, please click the subscribe button. There's no charge, but what it does is it'll notify you should I post something. I don't keep a mailing list, so unless you're part of the HGSI board, you'll never know that I post something. If you like what I do, I always enjoy comments. I enjoy the pros more than the cons, but I enjoy receiving comments. But you can also click the up thumb. That would be great as well. I titled was Friday's rotation out of big cap tech leaders a one-day wonder, or a market rotation, or something more sinister. Again, my name is Jeffrey Scott, and my email address, as you can see, is hgsidoc@gmail.com. Disclaimer, anything I talk about is for educational purposes only. I'm a doctor, not a broker. I don't have anything to sell you. And if I recommend any specific stock, it's related to a pattern or a story and not related to investment advice. I am independent. I've paid for the tools that I use, and trading involves risk, and you alone are solely responsible for any investment decisions you make. I've had a lot of people I've learned from. When I do education, I call it be your own guru because, at the end of the day, who cares more about your money than you? Maybe your wife or your heirs. But at the end of the day, you're responsible. So I started with CanSlim, as propagated and developed by O'Neill, improved by Morales and Catcher. Ian Woodward took CanSlim and built upon it with HGSI, the software tool. I learned so much and owe so much of my success to him. Ron Brown, his partner in crime. Mark Minervini, another, I don't think he ever worked for O'Neill, but a follower of a lot of the O'Neill disciplines. Very good friends with Kevin Ryan. With Ryan, I'm not going to. I knew a Kevin Ryan. I don't want to say the wrong name, but with Mike Ryan, who was an O'Neill money manager, they do a lot of seminars together. George Lee, my recently deceased buddy from Northwest Canada, what a great guy, great trader. Roy Kelly, who's got some interesting tools and methodology. I'll be at his meeting in 2 weekends in Sacramento unless they shut down more of the state. Sagar from Superior Profit, whose tools I use, the Q tools. Van Tharp, Position Size Money Management. John Person, trader, author, developer of great indicators, and a good friend of mine. What I need on my desert isle, I need TradeStation, Thinkorswim, and the various indicators I use. I use HGSI for analyzing positions and opportunities, EdgeRater, which accelerates some of the things that I do with HGSI, the tools in Q, which I find very valuable, and some of Dr. K's tools. From time to time, I may suggest a product, or I may negotiate a discount on a product for the people that follow me, but never do I take a penny on those purchases. Here's the website for HGSI, and keeping with that theme, they don't pay me anything either. Investing strategies, you'll see hundreds of movies by myself, Ron Brown, and others. Free 30-day trial will get you access to the tool without even a credit card. Where are we? Last week I thought we were rolling over. Well, if you look at the Dow, for example, we really haven't done anything. It's just these NASDAQ, big cap tech stocks keep roaring higher. Will we roll over? Are we going to rotate in some of these out of favor stocks? We'll see what this week shows us. But to me, it's at least uncertain as to where we're going. For multiple reasons, I'm raising cash. I'm selling some premium. I've got smaller positions. And I've made a lot of money this year. Part of me says just to shut it down and count my victory. If we look at how Friday, see a green except a lot of weakness in technology, including those big cap techs, and healthcare, which have been leading the market. If we go into Thinkorswim and look at the market, I'm using a different computer today. It'd be interesting to see how the video comes out. I'm worried that the size may be too big, but we will see. And I am doing this in 4K. Here is the E-mini futures. I like this because it captures all the information that occurs during the evening as well and the early morning. You could see here we are in January of 2019, 18 rather, and we had a pullback to the 50 and a recovery. In late 2018, going into 2019, we had a pullback of more massive proportions, reversing on the 200 and recovering. If you just hide this little issue here, we had a great move all the way up until we peaked in the S&P 500 on February 17th and quickly sold off. This day being a red candle high was a reversal signal. We knifed through some of these major indicators, and frankly, I was really late to cover my positions here and lost a little bit of my gains. And we pull back pretty deep. We then have a rebound date on the, and of course, I'm looking at weekly when I want, on the 23rd, but that's actually good for this discussion. So let me go back to that for a second. And you can see on the weekly of the E-minis, we've pretty much got back above the major moving averages. The 17 is still below the 200, the 50 rather, but we are well off of our all-time high. If we look at the NASDAQ futures and Qs, a little different. 17 is above 50 is above the 200. We bounced off the 200 nicely with a clear V-cut reversal, a V-bottom, and we are at all-time highs, hence the flag lighting up on that bar. So on the weekly, the NASDAQ looks quite a bit stronger and different than the S&P 500. Let's look at another. How about the Dow futures? Dow futures don't look nearly as good as the NASDAQ, do they? And in fact, unlike the S&P futures, the Dow futures are struggling to get above the 50 weekly bar. The 17 is looping above the 200. If I look at the Russell 2000 futures, again, like the Dow, I see an index struggling, I'm hitting the wrong one, I apologize, to get above the 50-day or 50 weekly moving average. If we look at the VIX, you can see that it's still well above where it was resting prior to this market turnover, but has come down significantly off of its highs, multi-year highs, I might add. And then lastly, if I look at the dollar, the dollar has fallen. It's sort of bouncing here off of the 200 or 1,000-day, 200 weekly moving average. Now, if we go and we look at the daily charts real quick, just to see if we see anything else that might be of value. And just to look back here, you can see the S&P futures well above their 17. The 50 is about to give you a golden cross. That might be bullish. Look how bullish the NASDAQ is on a daily, setting an all-time high here. But then look at what happens when I get to the Dow. And I see not only a failure at the 200, it's failed at the 200 for multiple days in a row and had a person sell signal come in. If I look at the Russell, it too failed at the 200-day moving average. The VIX has been drifting to the down, as we talked about on the weekly, and the dollar is at the lower end of its daily channel. Go back to my PowerPoint. Rates trickle down as markets rise. So in yellow, you see the S&P 500 rising here. And it's hard to see, but trust me, both the 10-year and the 30-year trickle down just a little bit this week compared to the prior week. Now, the AD line is a little bit more interesting, where the Russell 1000, you have higher index, higher AD line, getting close to the prior high. We actually turned down on the Russell 2000, despite the fact that, and on both the index and the AD line. So there's about a emerging divergence between large and small stocks. That could be a weakness to be concerned about. Notice the NYSE was actually negative on divergence, and notice that it's the Russell 2000 here that's following along with it. And look at the difference between the Russell and frankly most of the other things and the strength here in the Qs. Now on the breadth, Stocks above the 200 rose, stocks above the 40 came down, kind of neutral until I look at the 2121, and that shows me on a 12-week new high, new low, we are getting a little bit extended. So we'll see if that foretells anything. On the McClellan oscillator, according to my education from John Person, I'm looking for extreme readings, divergences, or zero-line rejects. I don't see any, so I do not have a signal on the daily or on the weekly McClellan. Now, it's interesting, we are in the weekly pulling into a zero line. It'd be interesting to see if we have a reject. What about other things that I might look for in the market? The buckets. If you take all the stocks in the S&P 1500, as you can see here, you put Bollinger Bands on them, what percent of them are above the midline of their Bollinger Band? And you can see right here that only 42% are above. Now that's kind of a middle number, so you're weak, but you're not overly weak. And then where are they in the buckets? Very few stocks are below or above. Most of the stocks are living right below the middle. No signal. There are no Hindenburg omens on the daily or on the NASDAQ or the NYSE. Certainly not a surprise. We would not expect to see them until we start to see new highs and the number of the individual stock new highs increases. Market tone. Well, we talked a couple weeks back about a series of kahunas to the downside, and they couldn't rock this market. We're starting to see signs of weakness. For example, the Dow, the Russell are showing some weakness, the NYSE. So we are starting to see some caution coming into the market. Now, I love this Q tool. So actually, let's bring it in real time. Turns out I was doing something stupid. Uh-oh. I got that one open still. Let me kill this one. Apparently, I am not able to save it with a different name and then have it work the right way. I did not know that until Sagar pointed that out to me. I certainly appreciated that. So let's go to the home page and bring this over here. So this is the Q tool, and this is sitting on one of my monitors all day long because there's so much that I learn on it. I can see the various S&P sectors, and oh, by the way, I can change the country here too. Not that I really have anything to do with the other countries, but I can look at the performance of 1 day, 2 day, and 5 day, 1 week, 2 weeks, and 1 month performance of the various sectors and get an idea what is leading. Again, part of my top-down approach. This here tells me the AD line of the sectors that everything was positive on Friday. If I look at the 1 day decline, you can see 9% of the industry groups were down and 19% of the stocks. Where is this helpful? Well, boy, when I have a day where the market's going up and I see deeper and deeper red, I know that the breadth is retracing and that typically the market will pull back before the end of the day. Now, note to Cigar, it would be really awesome, my friend, if I had 2 day and 5 day AD lines sitting here next to them. Of course, I might be using not the latest edition. That's the other thing. Maybe we need to start putting versions on these things. The Insight thing lets me look at, during the day, various groups of stocks, best growth stocks, underperforming value stock, da-da-da-da-da. I use that usually to find opportunities intraday, but I use it a lot at night. I like looking at the various sectors this way. And one thing that I saw this week that I thought was interesting, and whether it's a 1 week wonder or not, is look at financials. So on the week, financials were 7. And what happens is the higher the number, the stronger the sector. You've got 1 through 11. And on Friday, the strength was in the financials. Now, materials have been strong for several days. Financials a turnaround. So I might be curious if I wanted to go looking at potential stocks to buy from a top down. I might highlight financials and materials, hit the gears here. And what I'm going to open up are the industry groups that are in financials And I guess I didn't get the materials. All right, these are the financial industry groups. Now, if I look at these, and I largest to smallest, I could see the best performing was, whoops, did not want to do that. I'm sorry about that. Come on back. So let me go back one here to sectors. Highlight financials, hit this. Excellent. Let's rank them by one-day performance. And you could see diversified banks came right up to the top, which is interesting because I'm going to show you some interesting patterns with some of my, with Bank of America, for example. So I'm going to highlight diversified regionals, insurance, all the way down to thrifts and mortgage finance. Now I'm going to try and do a peer analysis where I'm going to pull up the stocks that are in those groups. So here you see a spreadsheet with all the different stocks. If you look over here, you can see they're all financials. And here's one of the cool things that Sagar has designed. If I hit the 3 stars, I'm going to get some of the top stocks in the marketplace. And what I got here were 2 regional banks and 1 life insurer. So I decided to now go to Vital and look at other stocks that might be similar to SFNC. So if I copy it, and I'm going to pull the Vital program over. And this is more if you're a fundamentalist. Put this in here, and it's going to run its thing, and it's going to give me some of the fundamentals. These are the peers. This is a regional bank, so these are some of the other regional banks. You could see that 98% of the regional banks were up on Friday. Light blue here tells me that it's undervalued. Not much of an opportunity for a short squeeze. Here's some of the basic fundamentals. I'm going to do the peer analysis. It's going to give me the peers. These are all going to be regional banks, thrifts. There's some diversified banks. And let's look for the stars. And the star is FNC. Now, you need the OQ for Metastock, but I haven't looked at this, to be honest with you. It may turn out to be a horrible looking chart. But let's go look at SFNC and see if we see anything. SFNC. All right, so to me, it's interesting, but it's not ready to be bought. It had some bullish stretch here, which tells me, I think that's a stretch. Let's see. Shows me it's starting to get some resistance to further drop. It's still pink here. I don't like this from a technical perspective, so I would have passed. Roy Kelly suggesting it's at a cycle low. But what I just did shows you how simple it is within the Q set of tools that Sagar has created to not only understand what the market is doing at a given time, but also some exquisite tools for doing some top-down investing. Now, I say it, and I'll say it one more time, this is not a replacement for HGSI. It does not have a built-in charting platform, and it doesn't do the other things that we do with HGSI. But for what it does a really good job, and hence why it has an important role on my desktop during the trading day. And this is what I just showed you. Now, if you don't believe me about big cap tech, these are the canaries that I've been watching for a long time, looking for clues to what the market is doing. Some of them, the Facebook, Apple, Netflix, Google, the Amazon are part of the various derivations of FANG. Yes, Priceline is now called Booking. It's taken care of in the chart. I just never changed the slide. Look at what our canaries did on Friday and for this week. They broke out again. Now, is this a climax run? We got red candle highs twice this week. Is this a sign of exuberance? It might be. We're up 120% in 78 trading days. When I show my performance and people are surprised when I show them I'm up over 100% on the year, It's like, dude, I've owned some Tesla, not now, but I got big Apple, Amazon, Netflix, and Facebook positions. That's what's driven my account. Know your news and earnings. Looking quickly at the news, core CPI, some small business indexes, industrial production, the beige book, jobless claims on Thursday. That's probably the biggest mover. Consumer sentiment, that will be interesting. I don't see any major Fed speaking or anything like that, so I put that as a moderate news week. Earnings are starting, and I think we're going to learn a lot very quickly, because we're going to learn on Tuesday the status of big banks with Citi, JP Morgan, and then later in the week, Bank of America, Goldman Sachs, and others. We are going to learn about airlines with Delta on Tuesday. So there's some big things coming in this week. United Healthcare on Wednesday. So that should be interesting. As I say in the lower right corner, it is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. I've been showing you my performance. This may be the last time because I'm going to probably start raising major amounts of cash. I have a big purchase I'm making, which is going to eat up a lot of my account over the next year or so. I just want to point out I'm now up well over 100%. Since I've been showing you this, to stop showing you today would suggest that I went down this week. 1.620973 this year, and that's starting on a basis of 1.4 million. Market thoughts, market leaders, big tech lagged on Friday, but most major indices closed higher. For the week, the NASDAQ led up another 4%, the Russell lagged at 0.6. News stoked the markets. China news on Monday, they're entering a healthy new bull market. It's nice to have them know that in advance. Gilead, remdesivir reduces mortality in COVID while shortages emerge, among arguments on pricing. As somebody who is a physician, who's in the business side of healthcare, who is a founder of a population health company and does a lot of things about healthcare cost containment, they price the drug quite low for the value that they get compared to what's in the marketplace. But there's a lot of arguments. While cases, deaths, hospitalizations related to COVID continue to rise, I live in Florida, and it's at a frightening rate here and many other hotspots. And we're now seeing cities rolling back some of their opening, including Atlanta and Miami. And yet, during all this, the political rhetoric is almost palpable. My performance on the week was certainly juiced by the climax run that appears to be emerging in many of the big cap tech, while the broader markets outside the NASDAQ struggle with turning positive on the year. You can see the NASDAQ's up 18%, but the S&P is pretty flat. The Dow's down less than 10%. The Russell's down less than 15%, and I'm up 115%. I want to defend my gains, and I need to raise cash for an impending purchase, as I mentioned. Thus, I am going to take profits in tech. I've entered the weekend with a new position in case of bad news prior to the open, but will lessen my overall exposure to the market this week and probably over the next several weeks as far as my personal plan. All right, continuing on. Let's go through our remainder of my top-down review. For those, if you like this stuff, besides clicking the like thing on Facebook, please consider looking at the 3-part video I did over last weekend. I think you can get some learnings there, not just rapid-fire Jeffrey looking at crap. Base combo, let's go into here. Let's look at market force and divergence. Let's take a look at some of the major indices. I want to call a shout out, a thank you to Mr. F. Well, F is his first name, for creating a new high jump indicator for me in TradeStation. So if you notice, the shape on this one, which is the one I've been using, and the shape on this one are exactly the same. Well, they should be, because you calculate the numbers. The problem is that this one that I've been using runs from 0 to 100. So 50 is sort of neutral. What I wanted to do is I wanted to make 0 neutral, plus 100 and minus 100, the peak and the bottom. So that was done for me. I have not been given permission to share, so please don't ask. If that changes and he listens to this, then I will announce that. But as you could see, E-minis, green bars here. That's the elder impulse indicator. Green means I could buy or I could hold. I shouldn't be shorting. Red, I should be shorting or holding. I shouldn't be buying. Blue, I can do whatever I want. On the weekly, we got a green bar and a buy sign. We're in a buy sign there, and we're in a buy sign monthly. So that's about as bullish as it's been. Here's the high jumps at 86% on the old way. Now notice it's only at 49% on the new way, but I have a feeling it will rapidly close if it goes higher. So I'm going to leave both of these on these charts until I sort out the new way. The Dow futures worsening with a sell signal came in on the daily on Thursday, and they're at 78%. The NASDAQ futures are at 100% on both parameters. The NASDAQ is clearly overbought. You've got MACD divergence. What does that mean? It's simple. A trend line. You've gone higher here, but you have gone lower here. And I can't do a trend line down there, of course. So you clearly got some MACD divergence. You've got 100% on the high jump bar. The NASDAQ has me worried. Worried not that it has to go down, but it's going to go sideways at some point. The Russell, hence why I'm lightening, sideways. High jumps at 78%. The VIX, let's just look at the VVX here. You can see it's pretty much sideways the last couple of days, but did have a recent buy signal. Let's go into HGSI, and let's go into the major market analyst groups. Let's go to Major Markets Plus, Warehouse View. Let's do a top-down ranking and get an idea of what the market is doing. As you can see, the leading groups were transport, gas and oil at the same time. That's kind of weird. Volatility, the dollar, semis, gold, IBD breakouts, biotech, NASDAQ 100, S&P, all near the bottom. So Friday was not a great day for the prior leaders. The NASDAQ finished up, but some of the leaders gave something up, especially some of the high-flying software companies. Let's take a look at some of the major indexes while we're here. So S&P 500, sideways move the last several days. Mobile breakout from a squeeze on Friday, certainly a strong day. The 50 is above the 17 is above the 200. The 50 is just crossed above the 200. That could be a bullish sign. It's in a person buy signal. I have no problem with the S&P 500 if the news flow is appropriate, continuing to go up. It looks actually pretty good considering where the market's been. This isn't the highlight. The highlight is probably going to be the NASDAQ, where you could see a beautiful bull run here. Maybe starting to get extended. It did have a red candle high 3 or 4 days ago. Here's what you don't want to see. The Dow Jones can't get above its 200-day moving average. That's got to be a bearish sign. At least I think it's a bearish sign. This red line here is a chandelier stop. And then if we look at the Russell, similar to the Dow, can't get above it. So you got a split market. NASDAQ looks like a freight train running unattended. The S&P looks like it's in a gradual ascent, but the Dow and the Russell do not look very promising. I mentioned IBD 50. This is an ETF, not this one. Well, that's an ETF too, but not the one I wanted. This is an ETF that's managed of the various ETFs in the IBD 50, and you can certainly see that this looks just like the NASDAQ. Now, for a long time, the breakout ETF was actually outperforming, and it still is, but the other has caught up to it. Now, I also like to look at other things. The dollar, sideways. The VIX, we know what the VIX is going to show, bouncing off the 200. Now, this could be a place for it to bounce. It's bounced here before. And then if I look at gold and silver, gold had a small pullback, maybe a little flag forming here. Silver, sideways move. And then if I look at gold miners, which might be ready to roll, look a little bit like silver, maybe a little bit better than the gold metal itself. All right. I might want to, just very quickly, biotech has been on fire because of some of the COVID activity. I'm just curious what that looks like. And it gave up a little bit on Friday as well, slowing down. I might want to look at industry groups to get a sense of what's moving. So I'm going to hit the warehouse view. I've got 175. If I look at a 2-day up, you can see I've got 76. If I look at 2-day down, I've got, well, that's not the one I want. Never mind. Let me change that one. I've got only short-term momentum downside. I've got 5 groups. But look at these 5 groups. We talk about the leaders of the market. This was the leaders selling off and being replaced maybe. Is it new leadership? Is it one day? But you've got semiconductor manufacturers. If I do a right click. Everspin, that has been a leader, went sideways. You've got specialty pharma. Horizon's been a great company. Concert looks like it's slowing down. You have infrastructure software, a lot of the viral things, Proofpoint, I think even CrowdStrike, application software, and biotech. These have been some of the big strength in the market. No surprise, many growth stock portfolios were down this week. Let's take a look at some of the big names. Automobile index. Tesla, climax run. Where will it stop? Nobody knows. There's still a lot of shorts, and what's juicing it now is the belief that it's going to get added to the S&P 500 soon, which will force people to buy this and will screw the shorts. So this is probably the quintessential short squeeze of the year. NIO is a Chinese electric manufacturer. Same exact chart pattern, 100 times smaller number. Don't know much about this company. The fact that it's Chinese bothers me a little bit. And I'm sure it's riding on the coattails of Tesla. There's so many crazy things out there. There's a company called SPAC, which these SPACs things are special acquisition vehicles. And this one was noted to potentially be acquiring an electric car manufacturer, and this vehicle that has no assets except for cash that I understand shot up on the fact that it was buying something in the electric car space. Boy, is this hype. I just don't want to be long Tesla when the market rolls over. A big source of my gains and a big mover has been consumer discretionary. I have several of these. Netflix earnings are out this week on the 16th. I'm thinking strongly of selling going into earnings. I have option play that expires on Friday. It's already very profitable. I probably won't want to, I'll sell at least half of it to avoid an earnings surprise. Amazon earnings are the following week on Thursday or Wednesday night. Huge run. I think it's getting a little bit extended. If I go back into TradeStation, let's look at Amazon. It's at 99.71, 99.78. It's as extended as it's going to get. It's got the MACD divergence. Look how high the histogram here versus over here. I think a pullback will probably happen soon. I tightened up my puts on it, sold some premium against it to pay for my puts, expecting that a pause is coming. Alibaba, big breakout this week with the China bull market comments. Overstock seems to be getting ready to run again. It sort of flagged here and broke out. eBay, huge performance, 26 to 60 something. Mercado Libre over $1,000. Chegg, I have some of this one breaking out to all-time highs. Another one I should probably be thinking about taking profits on. A lot of strength in that list. Airlines. Now, airlines, cruise ships, casinos all did okay on Friday. Now, is this a bullish looking chart to you? Considering what we know about impending layoffs, their business down, I don't know if I really want to be owning airlines here. It's had little runs. The Robinhood traders pump it up. Maybe you start accumulating a long-term position here. I just still don't trust them. Delta will report on Tuesday. We'll see how big their loss is. American ran all the way up to the 200-day moving average. And then like it went to the lecture, it reversed after tagging the 200. Delta, back down. Now, if you want to make the argument, you've got setting up on support with a reversal bar. It's time to buy. You can see a green candle low. I just worry about these things. I'm not ready to start loading up on airlines. Doesn't mean it's not the right time. What about cruise ships? Here's Carnival. You've got a Kahuna. You've got a pocket pivot. You've got a John Person buy signal sitting on the 50. That's interesting. Royal Caribbean, which breaks my heart. I've now found out they own Silver Seas, which is one of the more higher end lines. Here in an uptrend, you pull back to the 50. You got a mobile breakout, a person buy signal, a pocket pivot, and a Kahuna. I'm glad I covered my shorts on this, but I may actually wonder if it's time to take a long. Why would I do that? I'll show you what's got me somewhat intrigued. Norwegian. Let's go to find info on the web. Go to FinViz and see if I can show you what I'm thinking. Now, I thought it was Norwegian, but I don't see it here. One of the cruise ships, somebody, a current owner, probably an institution or early investor, sold like 4 million shares. And I thought, oh my God, that's going to sink the company. But when you have a secondary offering from a selling shareholder and you actually end up the week with a buy signal, maybe it is time. And then I did see this weekend that bookings are up more than expected on the cruise ships. Diversified banks. Remember this pattern here? Let's look at JP Morgan. Same pattern. Are we ready to buy banks? Is it over? Is it safe to go in the water? Did they have loan reserves that are too much? Are the oil patches all stable? Somebody must think so because that's a pretty bullish looking candle. Well, we'll know more this week because their earnings are coming out this week. So I own some Bank of America. The question is, do I want to own more? I actually got some puts too at 28 that I have as well when it was higher. Something to think about. We may look at that again. Citigroup, same pattern. Wells Fargo, similar pattern. So something looks interesting in the banks. That was diversified banks. What about regional banks? Remember the top-down analysis from Sagar. You've got similar pattern here. This is U.S. Bancorp. Citizens. Do they look like they want to go higher? Some do. I think on the regionals, I'm still happy to play, KRE. But I think I like the big banks here better. But nothing wrong with some of these. If I'm going to like the other, they're equally as ugly here. Diversified investments. Here's that acquisition thing. This, are there even fundamentals here? It's got a market cap of $1 billion, so they can make an acquisition. Institutions own 60%, trades at a crazy multiple. Somehow it's got a big ROE. I have no idea how that's possible. Turns back $1.21. Cash flow per share, 13 cents. I don't understand what this company does. In my mind, these are shells that are formed or purchased to make an acquisition. You put the cash in to make the acquisition. And look at this weekly. All right? They announced their intention. They didn't actually close on crazy. Crazy. How do you buy that? Nikola, this was one that worked. I think this is what's driving these special investment vehicles. Nikola is an electric vehicle manufacturer. Was being pulled along on Tesla. It's come back to earth a little bit. Here's another one. Don't know anything about it. Graph. So these, to me, are not trades. These are, you better know something or stay away. Semiconductors. I own the first two, and maybe I should look at the fourth one. NVIDIA, what a rocket ship. Is it extended? Absolutely. Is that a red candle high? Absolutely. I have a option position on it. I started buying it back here when it came up, and I've been rolling up and out, so even if my options go underwater, I'm positive on the position. Right now, I have 355 and 400 calls, and I got 425 calls that I'm short. Probably not, doesn't make me feel bad to know that I've got the 425 short calls, because it looks to me like we're slowing down on the way up here. So this is NVIDIA. What a great story, great video cards. AMD was left for dead, and then Thursday happened. Mobile breakout from a squeeze, pocket pivot, JP signal. Friday gave back a little bit, but still a positive finish to the week. Intel, it looks like the bank signal, doesn't it? Kahuna mobile breakout from a squeeze sitting on the 200. It's got a lot of moving averages above it. Some overhead supply here. I'd rather see it breaking out to new highs. I'm going to pass on that. And then I looked at Micron. Is Micron getting ready to run again? Squeezing with a mobile breakout. Its earnings are out. Great earnings per share growth, 4 times the multiple. Maybe it's time to think about some Micron. Chips look good, don't they? Renewable energy. This has really been led by Solar Edge, but we saw some of the other solar plays pop this week. This is Sunrun. Midst of a nice run at the high jump bar, getting extended. Vivint Solar, same story. Solar Edge has been strong for quite some time. And the one that I have some left, is Enphase, which doesn't seem to know what it wants to be doing. Probably should close that. And then consumer electronics, Roku, great week for Roku, breaking out on the week's end. Fitbit is a name that I'm probably not interested in buying, but Thursday a big move off the 200. Friday a Bible gap up. Something's going on in Fitbit. I don't know if they're being acquired already. All right. Exploration and production. Just look at a couple of these stocks. One-day reversal. One-day reversal. I'm looking for anything that looks buyable. These all look like they're in downtrends. They just had a positive day on Friday. So I'm not running out to buy one of these, I'll tell you that much. And then steel. I want to look at this because I saw a couple of these showing up on scans. Cleveland Cliffs, big reversal day, kind of a belt hold day, taking out 1, 2, 3. Not only is it a bullish engulfing pattern, it took out 1, 2, 3, 4, 5. It took out about 2 weeks worth of data. You have a kahuna, a new person buy signal came in, and a mobile breakout. The downside is clearly on the weekly, it's in a downtrend. It just traded up to the top of the range. So that would cause me to have a little bit of caution. And the fundamentals sort of suck. It pays a 3.8% dividend. Vale, I think this one is Brazilian. Trying to break above the 200. Mobile breakout from a squeeze. Kahunas, also weak fundamentals. Rio Tinto, is it a cup and a handle and a breakout potentially in process? Not when I look at the weekly, but it looks like it's trying to go higher here. And it's not this group, but U.S. Steel did show up on a number of scans as well. Yeah, big reversal day, but still in a downtrend and pretty low, lots of potential resistance. So, as always, I went through a major list of stocks, both from a top down and a bottoms up, and I came up with a list of stocks that I would consider playing this week. Let's talk about what I came up with and any ideas that I have. First thing is always, I like to remind you that just because I call it a buy list, it is a watch list. It's a buy watch list. These are stocks that I'm interested in. What does that mean? It means that within my various programs, within Thinkorswim, I will have a market watch set up of my buy watch. And I will respond based upon certain performance things that I see during the week. I'll be scanning in the market watch for a number of my favorite indicators. That's one way of knowing what's happening. In TradeStation, I have a radar screen, and I've included these stocks within my stock watch here so I could be looking during the day for signals that are forming. I also know that earnings season is coming, so I want to make sure I've got the free NPS earnings indicator is supplied by the Guru. If you want this, please don't email me. Go to the TradeStation forum and search for Guru earnings, and you'll get all the directions and all the files. And I could see that we've got earnings season starting in the next couple weeks. We have a lot of earnings coming out. So I'll be monitoring my stocks during the day there as well. Let me look at the list and see if something came up that I might be interested in talking about further. Many, if not all of these, we've talked about. I'm going to look at a couple of them. Now, let me start with, because I have my FOMO neighbor, Kathy. Very nice lady. Just because I'm looking at them doesn't mean I'm going to buy them. You don't have to be buying every day. And, until I sort this market out, I want to avoid losing money. So I'd rather not buy unless I feel comfortable that this market is going to head in the direction that I want it to. So let's look at, I circled something. Let me get my notebook out here. There's a couple of them. All right, let's start with Bank of America. As a top-down guy, I remember that when we looked at the Q Edge, that the group that I was interested in was financials, at least on Friday. Number one performing group. And when I looked at financials, the top group within financials, the higher the number, the better, was diversified banks. And if I look at diversified banks, I can see Bank of America here. Now, none of these are blue. Based upon Sagar's tools, blue is undervalued, red is overvalued. So that might be a negative. But I'm looking at the pattern here, and I'm seeing a series on the weekly of higher lows and higher highs. That's interesting. In fact, I can see it so much better on the weekly, but I might come in here and say, all right, bounced off a trend line. Another trend line somewhere up here. If I can get above where I'm at, and remember earnings are this week on the 16th, I'd want to break above this area. If I really was cautious. I might wait for it to break above the chandelier stop and the PSAR, but my target would only be up here. So one of the problems with trading this is that it's probably only got about $4 it can run, but that's about 15% on Bank of America. This is one I call the special, what do I call it? Special, that's my dog's favorite word, because when I say specials, he knows he's getting treats. Special situations. And why? Because one could certainly draw some trend lines on this stock and convince yourself that it's about to break out or it's already broken out. But more important, it is in a person buy signal, it's above its moving averages, and it pays a 23% dividend. Don't love the company or anything like that. I'm just pointing out an interesting chart. I wish I could tell you I had some great stocks to show you. Revolve Group, small discretionary spending. An IPO, seems like it's starting to move now. It's breaking above the 200-day moving average, which is just now long enough to have. Had a kahuna, mobile breakout from a squeeze. It's in a John Person buy. That looked interesting. The water utilities look interesting. Louisiana Pacific, it's broken above the 200. I'd put a stop above the high of the day there. Not great charts this week, folks. I wish I could tell you I had something much better to show you. Qiagen, this is a genomics company, lab company. Beautiful uptrend, pull back here to a squeezing area, had a mobile breakout from a squeeze. You got 3 kahunas in 4 days. Ian taught us that that's a big deal. Person buy signal, I like Qiagen. So let's look at Qiagen and work it up a little further. So QGEN. And again, especially to my neighbor, no FOMO allowed. I'm looking up for example purposes. Go into TradeStation. I use 2 screening things here. So I think, did it make that list here? Nope. So first screen, I'm going to look at it with some of my traditional indicators. So what do I see here? I see that the Laguerre RSI fired back a few days, but it's okay. I see that the person volume indicator is getting more positive here. That's good. I see the high jump is fine. I see I just came out of a squeeze and I had a PSA reversal. I've got some MACD divergence here as it's starting to run away from its trend line. Nice up move, a new weekly buy signal. Again, tracing up its trend line. Nothing here scares me. QGEN is something that I might consider. It would have to trade probably above 45.40. If I look over on Q, I see a go with flow as I've now got a blue bar here with a buy signal. I have a breakout here as well, breaking above the upper boundary. That might be a reason to not buy this stock because it's getting extended. But a breakout with volume activity, this might be interesting. All right. So now I'm going to go look at my options tool. So All right, so we can see that there was really a breakout. I mean, I'm not going to go there. I think there's some missing split in here. This pattern doesn't make any sense. Doesn't really matter. We're buying because the breakout here, we want it to be above 45.40. So I'm going to pull up my spread maker, and I want it to be bullish. So let's go into here, and let's look at the bullish options. We're going to long stock, long call. I'm not going to do short put, bull call, bull put, synthetic long. All right. I am going to, 41 days is okay. I might go out. Now, August is fine. Strike price is 45. All right. And I'm not going to buy anything until it goes above the price I said, which is 45.40. Two different strikes. We're bullish. Minimum range, probably $2.50. Make it $5. And let's see what happens. All right. Do they not have a lot of options? Huh. Maybe Kyojin has got to be optionable. My bad. There we go. So, if you remember from last week, I picked a number of different spreads here. I'm going to look at the maximum profits. I like Infinity, which is the group down here. The maximum risk, I like smaller numbers. So these three here are interesting to me. And those three are long calls, where, for example, let's look at this one at the money. Let's only go to one. Long call at the money. It'll cost me to control 100 shares, $182 or $1.82 a contract. The price will have to move from $45.31 to $1.80 to $46.83 for me to break even. I keep all the gains above that. The most I can lose is the premium I bought it. That's not a bad trade. What I'm likely to do is to buy that call. Now let's watch what happens when I construct this. First, I'm going to add an option leg, and I'm going to sell a put at the same price. Now watch what happens here to my price of the trade. All of a sudden, it's a free trade. In fact, it's such a good deal, I'm getting paid $2.50 to take the trade. It only has to move minus $2.50 for me to break even. Now, if I look at the opportunity for this trade, my break even up is $44.98. My break even down is $44.98. So $44.98 is the break even. The most I can lose is the $2 is not the $2.50, is I could lose $4,497. Why? Because I'm controlling $4,497 worth of stock. It would be $499 or $4,500 if I didn't include my credit. So I have the same risk as buying the stock, but I could buy 100 shares for minus $25. That's not a bad deal. Got the same pros and cons. But you might say, I don't want to deal with maximum risk of $44.97. So I might come back in here, edit it, and I'm going to buy an option leg. I'm going to buy a put, and I'm going to buy that put. Let's see if I can get one at 43. Let's see. All right, so now I'm going to pay $162. Now, when I was looking at buying the call itself, I was going to pay $182. So it has to move less against me for me to be profitable. So I can control the stock for less investment than buying the call. And I have capped my loss at $362 a share. If I bought a call, my loss was a lot less. It was $182. So I'm trading lower cost of acquisition to buy a synthetic call, which is essentially what the Scott synthetic is, versus buying a call. I look at each stock and I look at how much of a difference. And if there, in this one, I'd probably just buy the call and pay the money up front and have the lower risk. But that's what I do. I like this, and I'm going to watch it. I'm very interested in Qiagen, and I'm probably going to do either a long call or a synthetic. Now let's look at a bull call. And the bull call here, and why am I getting a P&L? Try this again. Okay. One of the advantages of buying a call, and of course I've lost my train of thought, is less money out of pocket. But the downside of buying this call is that time works against you, and that's called theta. So I'm going to lose 2 cents a day on this trade, just in time value alone. And I also know that that number is going to get bigger as we get less and less time left on the stock. The delta of 0.54, as I understand it, means 55% chance I'm going to finish in the money, but also I'm going to lose 54 cents every time it drops $1. I'm going to gain 54 cents every time the stock goes up $1. When I add my second call, when I add the put, the same strike price, what happens to my theta? They neutralize. Look at my delta here. It's exactly the same as the stock goes. But the risk is the same. I like synthetic stocks. They work for me. They may not work for everybody because I'm not going to let it go to infinite loss. So why should I even buy this call here when I'm going to stop myself out before I get there? So I'll be looking at Qiagen and some of the others. Lady neighbor, don't be FOMO. Just because I'm looking at it, you don't have to buy it on Monday morning. And I'll be watching the rest of my stocks. So I'm tired today. You can probably tell that in my voice. Been a busy week. I am shocked about my performance. I also know that as smart as I think I am, I've been helped by the market. But remember we talked about top-down last week, the market's the most important. Well, clearly the market's been on fire since since March 23rd. But I've been smart enough to be in the right stocks and the right industry groups. And if there ever was a time when industry groups mattered, it's now. This will be an interesting week to see if the COVID hurt stocks such as airlines, cruise ships do well, or are we going to have another leg down? I think this market's getting toppy. I'm raising cash for multiple reasons, but it's also the summertime. You guys have a great night. We'll talk to you soon. Thank you.